What's up, everyone? Welcome to the daily macro update for Thursday, October 23rd. Taking a look at some of the macro data here today, we see that existing home sales has had a little bit of an acceleration in September. When taking a look at the actual changes here on the slides from the National Association of Realtors, we can see that existing home sales, the median price has come down slightly, but as you can see, it's pretty seasonal, pretty on track there. And pretty much over the past couple of years, it has been steadily rising. And so when taking a look at the year-over-year home sales price, you can see that it is starting to accelerate here, which makes sense as we start to see rates, come down. Total existing home sales year over year is at the highest percentage that it's been since December of 2024. So this is the highest all year, and you could probably see that continue to accelerate. As rates get lowered even more from here without a huge, concern with the economy, right? Without a huge crash. And what's interesting is that the majority of the percentage of sales is coming from first-time home buyers and not investors. So that is definitely an interesting dynamic here, seeing a little bit of a strength happen from consumers. And so, yeah, pretty interesting information there. It's mostly being driven, though, by the higher upper end of prices, though, which makes sense because, housing prices are pretty high these days. I don't know. I really don't know too much about any home prices that are below $200,000 these days. So, it makes sense why the majority of sales are happening on the super high end. So, yeah, this is just continued evidence that the majority of the growth, or the majority of the consumption, continues to be floated by the more wealthier side, the top earners and wealth holders in the United States. So, that's why pretty much they haven't called a aggregate recession yet with the economy, because for the 20% of higher earners in the United States, there hasn't been any recession. In fact, it's been the opposite. It's been quite the boom. And so, because those high earners, even though they only make up, 20% or less of the entire country, they are floating, 50% or more of the entire consumption metric in GDP. So, that's just indicative of this, K-shaped economy post-pandemic. And most of the policies coming out of Washington are tailored towards those higher income earners and asset managers. So it's our duty to, be more like those people and increase our incomes with our skills and all that stuff. So that's why we're investing, right? All right. Taking a look at the Kansas City Fed Manufacturing Index, that also had a pretty decent acceleration. So this is a large change from, the other manufacturing indicators. And so this is the highest that the Kansas City Manufacturing Index has been really since 2022. And then if we go back to see when it accelerated back to these levels, that wasn't until the large rebound from the COVID pandemic reopening. So, this is a pretty large acceleration here over the past few months with the Kansas City Manufacturing Index. So that is definitely positive growth development. Obviously, this isn't nationwide. It's only for this specific region in the United States. But still, that's definitely a major component for for growth there. So we'll see what happens. Manufacturing has pretty much been in a recession since, I don't know, mid 2022. So it is interesting how when they start lowering rates, manufacturing is tending to do better, even with all the tariffs that are going on right now. That's pretty much all I have in terms of macro data. Getting into the actual price charts here and the title of this video, this market has pretty much been the October of a big bearish divergence. Now, what do I mean by that? We had this huge, red candle on accelerating sell volume on October 10th. And then pretty much with this bounce that we've been seeing since that huge sell-off day, it's been on decelerating volume. And so when you have a price bounce on lower volume, that is a huge bearish divergence. And so on a bearish divergence signal, you definitely do not want to be chasing this. Now, that's just, typically what the signal says. It's hard to predict what is actually going to happen, but typically with this setup, this is not where you want to be, chasing a lot here. So what I would be doing is, taking a look at the inventory in the portfolio and, selling anything that's near the top end of the trading range and, getting ready for anything lower. So yeah. We'll see what happens going into November here, as well as we'll see what happens as the government shutdown ends. Hopefully, I mean, they're saying that it's going to end this week, but we'll see what happens there. We're supposed to get inflation data on Friday. Now, the inflation data that comes out on Friday, that'll be for September. And according to the Cleveland Fed's inflation nowcast, they have the September number accelerating. We're now heading into November, so this is all going to be super lagging data. And then they have October remaining, still around 3.0%, but it's rounded up from 2.95, which is slightly lower. When you take a look at core PCE, that's having a little bit bigger of a drop there. And so core PCE is really what the Fed pays attention to. And so, seeing that drop there aligns with what we're seeing in the bond market signal, which is that inflation is going to start coming down, in November and December, and then going into 2026. And, if inflation is coming down, that could be good or it could be bad. It really depends on what the growth aspect is doing, as well as, what the credit markets are doing. Because if you have inflation slowing down, credit spreads widening, as well as you have growth remaining slow or even going down, well, that's, a big slowdown in the economy, right? And really, Bitcoin, other risk assets don't tend to do well in that environment. Not saying that's going to happen. I'm just saying on one side of the coin, if inflation is coming down, you have to pay attention to what, those other metrics are doing. On the other side of it, if growth is actually accelerating, which is interesting how, the Cleveland or the Kansas City Fed is having a little bit of a signal of that. If growth is accelerating, or at least, growing a little bit, while credit spreads are remaining, narrow and tight historically, that could be more of a Goldilocks slash soft landing type of signal, in which case, I would expect the market to continue higher on that good news. So it really depends on the context of which we're seeing this disinflation. So that's how we are going to be playing that here. But yeah, the other thing that I was looking at was, getting a bit of a bounce in things that have sold off over the past couple days, including gold, silver, gold miners, silver miners, copper miners, all those different types of, industrial and precious metals. Interesting bounce in oil. I did see some news on that. I forget exactly what it was. I think it had something to do with China or whatever. But what matters is that even though oil is experiencing this bounce right now, it still is remaining in a bearish trend. And so, you definitely don't want to chase this. Interesting moves, though. Volatility continues lower. Our team took the VIX to neutral trend on Monday, and it's heading well below 20 now. So that's actually a good sign. And yeah, credit spreads remain narrow. You're seeing a little bit of a bounce in bond yields from the low to the trading range. And so things that are positively correlated to the 10-year bond yield, things like that, they're having a nice little bounce. And interestingly, the dollar continues higher. So right now our team has the dollar in bullish trend. So that's all interesting there. Good opportunity to sell some a little bit that have broken trend. Trying to see what happens with Bitcoin as well, because it did hold up pretty nicely on a super short term. It's obviously trying to put in a little bit of a immediate term higher low here. So we'll see if that actually materializes. We still have it in bearish trend in our model. So we'll wait and watch to see if it's able to prove itself. Bitcoin miners had a decent little opportunity at the low of the trading range yesterday. So we'll see what happens there if Bitcoin miners continue higher. But that's pretty much all I have on that. Yeah, for those of you who are in our macro investing community, you guys understand our stance on our positions on the 11 U.S. sectors of the S&P, as well as the different top 10 stocks here. As far as the highlight goes on the best performers, you're just seeing a pretty decent bounce in Tesla today. So you had a chance to buy some of that. Also, at the low of the trading range, you can actually see here how Tesla opened up, touched right there at the low of the trading range, and then ever since then it's had a pretty decent bounce. So yeah, nice little percentage there. So yeah, it's helpful to just be able to fade narratives and act on the process here. But that's what our trading ranges do pretty well there. Other than that, nothing really else here. Energy actually did turn bullish in our model from bearish. So XLE has been a pretty wild, has had some pretty wild swings. So the volatility profile on XLE is also higher. So I'm going to see how that shakes out. Not necessarily buying that yet, but let's see. A little bit of a pop in the RRP as well as the TGA. Liquidity remains low. All right. With that, we'll go ahead and take a look at some of the questions that you guys have here. It's going to be a little bit of a shorter episode today, but that's all right. Let's see, not seeing any in Instagram. Matthew Wright says, nice bounce on IBM. Yeah, we were calling this out on our group this morning. I had some post earnings, quick sell off there. And yeah, it provided a crazy opportunity with that dip there in the morning. So pretty interesting to see this. How much was that today? A nice little 7.5% move to take quick advantage there. Let's see. So gold and dollar are bullish trend while the 10-year has a bounce. Yeah, so both gold and the dollar are in bullish trend at the same time. And the 10-year yield is bearish trend, but it is currently having a bounce. So, yeah, in terms of, some different ideas, nothing too crazy today. I mean, we're just seeing a big bounce from the other day. And, I was buying some gold the past couple days, and so I was selling some on green here just to consolidate a little bit. As you're still seeing gold volatility remain pretty elevated, although it has come down a lot. I'd rather, if gold volatility is able to come down, to around these levels, I'd be more inclined to do some more heavier buying. But with gold volatility still remaining high, I'm just doing some quick ins and outs. But yeah, as of right now, I mean, I'm not really seeing too many opportunities. Sometimes it's like that, though. Won't dollar growing pull from gold? No, not necessarily. Why would I do that? Depends on correlations. Is gold volatility less important for gold than VIX is for SPY? No. It's just the volatility. Volatility is important no matter what asset you're looking at. Is there any possibility of postponing tomorrow's CPI data release? I'm not sure, to be honest. I haven't looked into it that much. I mean, supposedly, I thought it was on Friday, actually. All right, tomorrow is Friday. Wow. I'm getting my days mixed up here. I mean, we can see what, we can look it up in a little bit, but yeah, I mean, let's just see here. Yeah, so I guess they are releasing it no matter what, is what it looks like here. Yeah, so we'll see what happens. I mean, it's pretty much all priced in at this point. It's set to accelerate, so I wouldn't be surprised if we see that 3.0 handle on the CPI print tomorrow. But good question. Good question. Yeah, in terms of things that are having a little bit of a red day today, natural gas, coffee. Coffee's been in an extremely bullish trend here. I need to look for a better ETF for this exposure. But yeah, so getting ready to try and look for a buying opportunity in some bond ETFs. Let's see what else. What else is having a decent red day today? Walmart. Yeah, I mean, not too many opportunities here. We'll see what happens on Friday, though. All right. Well, we're going to make this a quicker episode here. I appreciate everyone for joining. We don't have an episode tomorrow as it's Friday, but we will be back here on Sunday for the Sunday Macro Wrap-Up starting at 8 p.m. Eastern Time. Appreciate everyone for joining. Good luck out there, and we will catch you on Sunday. Bye, everyone.